Mr. Thomas, thank you very much for your time. I must congratulate you on your decision of pricing your IPO very smartly and intelligently. You left a lot of value on the table, and investors did make money who actually got the allotment. So, good practice, I must say, on behalf of our viewers who are also IPO investors. I want to understand from you the impact of the increased CRAR, the increase in risk weightage by RBI for this sector and also for organizations such as yourself.
See, overall, on the personal loan segment, the consumer credit card advances, all those sectors will have an impact. The cost of such loans will definitely increase. And banks like us especially will not have much impact, but because our microfinance is already at a 75% risk weightage, and it is excluded. It is not included in that category. And for NBFC lending, we have a 4% of our assets are in the for loans given to NBFCs. So there will have a, but it is not very significant. So it is not going to impact much banks like us.
No challenge to your overall growth, right? Growth will not moderate on the back of this announcement by Reserve Bank, right?
No, it will not impact on us. Yeah.
Okay, let's move right on, because the last time we spoke to you, you said you were expecting a 35 to 40 basis points uptick in your cost of deposits. How has that panned out for this quarter?
Yeah, it is already, our cost of funds increased to 7%. Because the repricing is of deposits is happening. So we are expecting maybe 10 to 15 basis point further increase on that.
Mr. Thomas, I want to understand from you, growth is one point which you have already given good visibility of. But, and you have been managing your cost of funds as well, because the target audience, kind of prices it in. I would say the requirement and demand is very strong. But what are your thoughts on asset quality? Because it has started, RBI's worry or the regulators' worry has started with consumer high unsecured loans. But is this worry likely to spread? Otherwise, asset quality overall, you think you're comfortable, or the sector is comfortable on asset quality?
Yeah, we are, and the overall micro lending sector is comfortable on the asset quality, because we have gone through multiple cycles of challenges in the field. In the last 3 years, the entire COVID really impacted, but all, not only small finance bank, all microfinance institutions, all have come back to the pre-COVID, close to the pre-COVID levels, I would say. So because the microfinance sector, we focus on rural, 73% of our assets are in micro loan segment. So we focus on micro entrepreneurs, farmers, and the rural customers. So they value their credit score. They see a lot of importance for, they don't want their credit score to go down. So they keep and they need continuous funding support. So there is no such issue we are expecting.
Okay.
Okay. One more thing, Mr. Thomas, that now that there is a lot of tailwind in your sector, in your space, in a borrower class, asset quality is not a big worry, as you are telling us. Where in the cycle are we right now? Because the sector continues to remain cyclical, long cycles. Are we in the middle or we are early growth phase of the cycle in your view?
You mean the micro loan segment?
Yes, micro loan. In the micro loan side, which part of the cycle are we in?
So we are in the growing stage, mature, that close to maturity stage, I would say, because we ourselves in ESAF have been in this space for the last 27 years. We have been working and we have seen, so the sector has matured. So we have seen multiple challenges of natural calamities, political challenges, all these challenges we have seen, and also a nationwide COVID demonetization. So all these challenges we have gone through, the sector has gone through, and it is stabilized almost. It is stabilized now, and now the credit we have introduced the sharing of data with the credit bureau, and our Reserve Bank of India has also introduced common guidelines for all these both banks and MFIs and NBFCs all working on the same ground now. So there is a lot of maturity has come. That's what and now from a group loan level, from a enterprise level, it is growing now. So the aspirations of micro entrepreneurs also started growing. So banks like us will be supporting those growth and those dreams.
Okay, that's good to know. And what about the outlook then when it comes to provisions? Because sequentially they have managed to lower, but how should we read this in terms of your overall asset quality on the incremental book? What's the outlook on your provisioning standards?
Yeah, I think the provisioning we have 70% PCR now, so we will maintain that levels in the coming quarters also. So that is our expectation, and there are little bit cyclical issues, but the credit cost remains at a 2.2 to 2.5% level. Will continue to remain. That's our hope.
So up till now, your main focus geography-wise has been Kerala, Tamil Nadu. What's the roadmap from here on to expanding to other states as well?
Since we have started from Kerala and the south to have a focus, that is natural to any organization. But we have started our operations in Maharashtra, Madhya Pradesh, Chhattisgarh way back in 2004. So we have got a very good presence in the central India region. Maharashtra alone, we have 70 plus branches we have. And also from last 3 years, we started our expansion in Uttar Pradesh, Rajasthan, Haryana, Orissa, and these states. So today we have presence in 21 states and 2 union territories, including the Northeast. So we will be growing. The next phase of our growth will be focused on these emerging states, and we see a lot of opportunity in those areas. And our branch network is there. Our customer service centers majority of our customer service centers are operating in these geographies. So in the next 2 to 3 years, our focus on the home state, it has already come down. It was 1 year before, it was 50%, 55%. Now it is only 43% in home state concentration. So it will come down to around 3 to 5 years. It will come down to 25% around that rate.
Right. All right, Mr. Thomas, thank you very much for your time. Good luck on your roadmap from here on.